Hakes. I'm joined by our Chief Investment Officer, David Allen. David, tough week for markets this week, tough morning for markets today.
Absolutely, Dillon. We got off to a pretty good start, but as you mentioned, some of the economic data that came out this morning has really generated a pretty strong sell-off in markets this morning.
We got a CPI report this morning. We also got a consumer sentiment report. It seems like markets are a little bit unnerved by what they learned this morning. What did we see in the reports?
In the CPI report, it was very disappointing data. We saw an acceleration in headline CPI growth on a year-over-year basis to 8.6%, putting in a new high for the post-pandemic recovery. And we'd been expecting that we would see inflation continue to trend down, and so that the consumer prices continue to accelerate was certainly a disappointment.
What components of the CPI are driving higher inflation?
Most of the acceleration that we've seen in consumer prices has been driven by food and energy. Both of those are related to the ongoing war in Ukraine, which has roiled commodity markets globally.
Consumers have obviously noticed how these higher energy prices are flowing to the prices they pay at the pump. We saw a big story this week that national averages for gas prices exceeded $5 a gallon. Obviously, locally here in San Diego, we see prices even significantly exceeding that price. How are these things going to actually change the way the Fed looks at inflation and plans on tackling inflation?
Right. So when the Fed meets next week, we do think that this morning's CPI report is going to factor in pretty significantly to the decision that they make in terms of the policy changes. Before this morning's CPI report, our base expectation was for a 50 basis point increase. I think after the CPI data this morning, there's a significantly greater chance that we'll get a 75 basis point increase from the Fed next week.
Why the change in your expectation of their policy?
Well, as you mentioned, we also had a consumer sentiment report out this morning. Headline consumer sentiment, that report fell to a 50-year low. So consumers are obviously feeling quite pessimistic about their economic situation. But also included in that report was higher consumer inflation expectations. And that's something that the Fed watches very closely. And I think that's going to motivate more increases earlier to try to keep a lid on consumer inflation expectations.
How is the news this morning affecting interest rates?
Well, all week long, we've seen interest rates move higher across the maturity spectrum. But this morning in particular, we've seen a pretty big gain in short-term Treasury yields, much more than we've seen on the long end. So that's leading to a decline in Treasury yield spreads and perhaps moving us closer to a yield curve inversion.
How is the change in expectations changing our investment strategy? How is it changing what type of companies we want to invest in?
Though the economic landscape seems to have shifted a bit this morning, the companies where we think there are the best opportunities is largely the same. These are companies with strong balance sheets, immediate profitability, quality companies that have strong cash flows. Those are where we think the best opportunities remain in U.S. equity markets.
All right, David, what do we have on the agenda for next week?
As we mentioned a few times, the big event on the calendar next week is going to be the FOMC meeting on Tuesday and Wednesday. Along with the release of the policy statement and the press conference on Wednesday, we'll also get a new set of economic projections from policymakers. In terms of economic data, actually before the end of the FOMC meeting, we'll see retail sales data where we're expecting to see slightly slower growth than what we saw in April. And at the end of the week, industrial production will be something as we continue to track activity in the industrial sector.
Thanks everybody for joining us for Private Asset Management's Week in Review. We'll see everybody next week.